What's up, YouTube? I'm back again with another video on Rolls-Royce, and today I want to go over the investor update conference call that I posted. Before I really get into that, I just want to do a quick history lesson on Rolls-Royce and explain how we fell from $14.54 down to $1.60 where we are now. Back in 2018, Rolls-Royce produced some engines of the Trent variety that had some major problems with internal fan blades. These fan blades were found to have premature weathering, and needed replacement, and some even exploded. Rolls-Royce was on the hook for this, and they were kind of stuck fixing these engines and maintaining other ones at the same time. This kind of left them bleeding without much chance to get things done and having to pay people extra money. Then, almost luckily for them, COVID happened and grounded a lot of planes and gave them some breathing room and a chance to make some repairs. So, as a pretext, I just wanted to bring that up before I get into the rest of the report. Rolls-Royce started off 2020 with good momentum before COVID hit. They quickly acted and started cutting costs immediately and are confident that they can save $1 billion by the end of this year. There was a $5 billion refinance, and over 9,000 jobs will be removed by 2022. Part of that $5 billion was a 3 to 10 stock offering, which I'm going to make another video on later. They have finished the £5 billion cash raise and are extremely confident that they can weather the rest of the COVID crisis no matter how extended it is. In civil aerospace or airlines, large engine hours were at 42% of last year's numbers, but they have been steadily increasing every month. China has been very strong in helping recovery come quick for Rolls-Royce. Rolls-Royce makes money on maintenance on their jets. That is their primary source of income in the civil aerospace sector. The second COVID wave did slow them down, but it also gave us a chance to buy. By the second half of next year, they expect a rapid acceleration of recovery. They also mentioned, although it is a small percentage of the overall fleet, the newer jet engines like the XWB-97 and the A350-1000 are already flying at 2019 levels. The next part of the conference call, they acknowledged the problems with their previous engines. Luckily for them, COVID, grounding the planes, gave Rolls-Royce a time to inspect and fix most of the engines with this issue. To elaborate, all high-cycle XWB engines have been inspected with 20% showing signs of wear. Most have been refurbished with ample spares in place. The first stage IPC blade showed wear in case you want more detail, and you can look that up. The cause of this is still under investigation. Luckily, the defense business has been largely unaffected by the pandemic. They already have a backlog of orders that will cover 90% of that entire segment's 2021 expenses. All facilities have stayed operational, and the UK is actually increasing their defense spending, which is very encouraging. Britain wants their own next-generation fighter jet, and Rolls-Royce is going to build it. Also, the German Air Force has ordered 56 Eurofighter engines for next year, another cash source for Rolls-Royce. The power systems or power generation business took a pretty big hit because of COVID, but China has been keeping them afloat with Rolls-Royce's market share steadily increasing. The Biden presidency might help this as well. They also have an order for over 1,000 MTU systems in China. MTU systems powered the largest yachts, the strongest tugboats, and the biggest land vehicles, and provide energy for the world's most important mission-critical applications. I feel like that sentence doesn't make much sense. And anyways, they are selling a lot of these. These medium speed engines, we will get back to these in a little bit. Rolls-Royce is also embracing the future, and they have started working on a hybrid and hybrid electric methods to fly airplanes. Also, to mention, Rolls-Royce already makes the most efficient wide-body plane on the market and that's the XWB on an A350. Moving along, the UK has committed £215 million over 4 years for a small modular reactors program. This is green energy, and it has also drawn interest from outside investors. They went on to talk about how painful the cost cutting was and how painful it was for the people losing their jobs. Also, they are negotiating with trade unions for future projects. Another thing mentioned is that they have a few more assets that they are willing to sell and might actually be looking to sell. Among these are ITP Aero and Bergen Engines, a medium-speed gas and diesel engine business. The main key points I want you to take away from this conference call was that they are sorry for all the job cuts, thankful for the support from the investors like you and me, and the government for increasing the defense bill. The £5 billion cash raise is over. They have a ton of defense work next year and have a much more slim overall business model. They fixed most of the broken or damaged jet engines and are selling power plants in China. They are starting to work on electric and hybrid electric planes. And one last note is this could very well be one of the last times you hear from these guys before new leadership takes over. So that's all the main facts I want you guys to remember. Please hit like and subscribe if you enjoyed this video. Shout out to my boy Robert A., my first student. He's been making tons of money. Hope you guys have a great weekend. And this is it, Stock Surfer signing out.